Good morning, everybody. Hey, welcome to what is it today? Tuesday. Tuesday, January 28th. I'm glad you could join us today. Hey, I'm hoping Dave's back in the studio today after his a little extended vacation. But yesterday was just a really red day, the worst day on the Dow since October. So, hey, we'll talk about that and other things. But listen, if you don't know on a scale of 1 to 100 what your risk number is, you need to give me a call right now at 863-382-0037 and head through our financial x-ray. Do it right now, 863-382-0037 to schedule your financial x-ray. Hey, Dave will be here in just a minute.
Line FM, that's Shannon there. We're at 8:38 here. Now it's 22 before 9. And we're going to check in on your money and see what Wall Street is doing to your IRA and 401k this morning. Let's head down to the offices of Statler Financial Services in downtown Sebring. Phillip Statler is there this morning, and so am I. Phillip, hi.
Hey, Dave, it is glad to have you back to help carry the load, man. Now I know what you feel like when I disappear for a week.
Scotty doesn't feel quite as good about arguing with you as I do, so yeah, I know you carried a bit. So I got to ask you, here I'm gone for 10 darn days, and I come back and I find a 400 and some odd point drop in the stock market. You guys just weren't carrying your share of the load, or could it have been the fact that half of China is getting sick, huh?
Well, and I think that's really the issue yesterday is that the whole coronavirus deal really hit top of mind, top of news media, and we're still seeing the continued issues there, Dave. I mean, we're continuing to see more people dying, more people infected. I did read a little headline that one of the ex-FDA chiefs worries that China may be underestimating the coronavirus by thousands, and so and thankfully that doesn't seem to be weighing us down today.
Now they're basically quarantining a city of 4 million people, so it's not like they're not reacting. But Lordy, yeah, it's making its way onto these shores as well, and we're seeing more reported cases every day. So certainly something to be concerned about, without a doubt. I was surprised, though, that it cost the Dow 454 points yesterday. That would be one of those things that you'd expect to be a major economic event, which this could be, but still, that was a fright reaction, kind of out of proportion to the threat even, right?
Well, it definitely did look that way, but, we sometimes, a lot of times, bounce off of what the other indexes are doing, and so the Asian indexes were getting tanked, and actually, even today, I think I saw I can't remember if it's the Hang Seng or the Shanghai was down 2.5% again today. So
yeah, I'm showing the Hang Seng. It's up a little bit at the close this morning, but the Nikkei was the one that really got whacked yesterday. Obviously, worrying about their neighbors, that was down by over 0.5%. So
yeah.
Hey, I'm sorry.
I showed the Shanghai was down 2.75%.
Okay, that was one of the ones I didn't have. They got whacked then.
Yeah, they did.
Wow. Start out the morning with some data dump out of the federal government. We got some durable goods information in, huh?
We did. Durable goods came in at 2.4% growth in December, which, if I'm looking at my numbers right, that's a pretty big surprise. I have durable orders up only 0.4% is what everybody expected. So that's a pretty substantial beat when it comes to orders, which is a good sign because that means people are picking up stuff to put in inventory again.
Understood. If memory serves, that's been a trouble spot for the last few months as well, hasn't it?
It has been. It has been some unexpected things. So this is an unexpectedly good thing that it beat. Yesterday, after Scotty and I got off the air, new home sales came out, and they were slightly disappointing. We expected 731,000. We got 694,000. So a little bit of a miss there on new home sales.
All right. So we get a mixed bag to start today out. And, of course, we're still in earnings season. Bunch of household names came out. You didn't have the numbers, and I don't have them either. But HCA Healthcare reported they've got the interest in Highlands Regional down here in Highlands County. And Just happened to be the same chain that owned the hospital that Gladys spent 4 days in last week up in Tallahassee as well, so it caught my eye. They had a beat, and their stock's on the way up by 2.6% this morning. That's good news. You got some other household names as well, I gather.
We do. We've got 3M. You know, the Post-it note guys. They reported profits of $195 a share. That's a miss. They expected $2.10. Now, part of that miss is a 20-cent charge for some newly announced job cuts that are coming out. And revenue was a little bit less than what was expected. And so they were down 1.4% yesterday, and now they're down another 1.8% this morning. So taking a toll on them today.
You know, 3M is one of those companies that's kind of near and dear to the heart of those of us who grew up with it a day's drive of the Twin Cities up there. They've had some hard times the last couple, 3 quarters, if memory serves.
They have. You're right, Dave. And so then we had Pfizer, the drug maker. They missed by 3 cents a share. Revenue was above what was forecasted, though. And so they were impacted by some loss of some of their major exclusivity on like Lyrica, that drug. So it's going to be able to be generic now. And so they're down almost 2% this morning. Another one we've got is United Technologies. They beat by 10 cents a share. Revenue was up by 8%. So pretty good rise in revenue there. But I don't know if it's profit taking or what it is, but they're down about 1% this morning.
All right. Other major names that came out that you noticed?
So here's one that I know you like, Harley Davidson.
Oh yeah, the Hogs.
The Hogs. So they missed their quarterly sales numbers by 3.1% decline in sales. Though I guess it was a positive note because they said that was the smallest they've seen in 3 years. Smallest decline.
It's nice to have less bad news, isn't it?
Yeah, it is, you know, but it definitely, we're seeing some downward movement there. They're down almost 6.5% this morning before we really get going today. Pulte Homes came in. They beat pretty much across the board. They beat by 5 cents in earnings, revenue top forecast, new orders jumped 33% for them. So that's sounding pretty good. They're up 2% this morning after being up about 1.4% yesterday. So good news, and they'll actually open, Dave, at a new 52-week high this morning.
Cool beans. I've obviously been out of circulation for the last few days. Do you have a general bead as to how earnings season has gone so far? Sounds like we got kind of a mixed bag this morning.
It's been a mixed bag, actually, all of last week. And last week, you know, it was a little slow in earnings too. But it was kind of a mixed bag last week. Of course, with this coronavirus kicking in, that's been a big deal going forward. And then, you know, yesterday we talked about Expedia Group, or we actually talked about all the travel stocks. And at the open yesterday, most all the airlines, the cruise lines, Expedia, those type of guys were down over 4% at the open yesterday. Like Expedia closed down on about 2.75% yesterday. They're bouncing back this morning, about 0.75% right now. And so we look to those to rebound. I know I saw a little headline that said airlines were rebounding this morning. That's probably helping the Dow significantly.
Got to assume somewhere down the line that, you know, folks have an initial panic reaction. It kind of creams an entire sector. Then all of a sudden people go ahead and look at, okay, this company, this country, this company have an interest in the Pacific Rim markets that are being affected the worst, and then kind of go back and look at the companies in the sector that didn't really deserve to get whacked as bad as the whole sector did.
Yeah, exactly. And so now people are looking more at earnings. They're looking at fundamentals. And actually, you know, so the big headlines are off, right? So, I mean, there's still headlines out there about the coronavirus, but the next time we see another big, hey, this many people died or it's expanded to a new country, I would expect to see the same thing happen.
Pretty much. Yesterday it was everybody's dying. This morning the lead story on one of my tip sheets is, here's why the scare is overrated. So, yeah, your point's well taken. Setting the table for yesterday, it was a crummy day by any measure. Dow, as I mentioned, was off by over 1.5%, down 454 points. NASDAQ was down 175. That was almost 1.9%. And the Standard & Poor's was off by better than 1.5% as well, down 52. And a big chunk of that, the majority of it, scares about the coronavirus. 45 minutes before we open this morning, Philip, I'm looking at a little bit of green ink on my machine. Are you as well?
Yes, sir. We are heading green, and it's kind of bounced around in the green, but we've got the Dow up right now, 132 points. The S&P 500 is up 20. The NASDAQ's up 76. So everything seems to be coming up green when we look at those indexes. If we look at gold and silver, they're retreating a little bit. Silver's actually taking a pretty good bath right now, down 1.6%. Gold's down about 1/4%. And crude oil, Dave, the whole time you were gone, it was going down. And this morning, it's going back up. We're up about 1/3% to $53.34 a barrel.
Must have been all that gas I used driving up into the Panhandle that drove the demand up. What do you think?
Hey, you know what? But I thought you had a pretty efficient car.
Well, I do, 45 miles a gallon on the highway. I'm kind of proud of it. Yeah. Hey, increase in demand is increase in demand.
That's right.
Overseas markets, as you mentioned, Philip, Shanghai was way off. Little recovery on the Hong Kong exchange at the close this morning. They were up by a few pennies. Japan taking the bath this morning, down over by 0.5%. European markets generally are up. They're having the same kind of a whoops, we overreacted recovery that we have this morning. Somebody needs advice to figure out how to stabilize one's retirement. This is kind of the poster child for if you're planning on retiring in the next week and a half. Not a good time if you're fully in equities. How do I find you to insulate people from that issue?
Dave, you know, if people are 5 years out from retirement or they are already retired and they don't know what their risk number is between 0 and 100, they need to call us right now at 863-382-0037 to schedule their financial x-ray. They can catch us online at statlerfinancial.com and then join us every weekend for the Statler Financial Radio Show. We're on at 6 a.m. in the morning for early people. For those who like to sleep in, we're in at noon on Saturdays, and then 10 a.m. on Sunday mornings on News Talk 730 a.m.
Cool. We got you covered, and back here tomorrow morning on Light FM. Philip, thank you so very much. Appreciate the kind wishes, and we'll catch you in the morning, all right?
All right, man. You have a great day, Dave. I'm looking forward to speaking to you again tomorrow.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, everybody. It was so good to have Dave back with us today, and looking forward to the rest of this week. Hey, remember, if you don't know what your risk number is between 0 and 100, give me a call right now. You need to know that number, 863-382-0037, to schedule your financial x-ray. Hey, have a great day. I look forward to speaking to you again tomorrow.